The Fed literally just crashed the market on purpose. This is one of the most bearish and hawkish meetings the Fed has ever had, and they're doing it for a reason, and that reason is inflation. I want to talk about that in this video. I want to talk about how that affects the crypto market and the outlook that we have for the immediate short term and the medium term this year. Is crypto just something you shouldn't be in? Is it all over? What is going to be happening to the prices? I'm going to go through all of the points that have really, seen risk off in the crypto market and in tech as well, generally over these past few days. And I want to talk about that and how it's going to affect us and where I see that going forward. So let's get into the video. Firstly, I do actually have a crypto giveaway in January, so go and check that out. I'll leave the link in the description. Giving away $10,000, $6,000 to one person, $2,000 to two people. That might really help you out, and I hope it does. So check out the link in the description if you want to enter that. So going through to the chart, we can see this big sell-off and this area of value that we've been seeing, this consolidation. We're out of that now, right? So we're not mucking around anymore. We're not seeing, well, it might go up. What's it going to do? This is very clear now. We are in a risk off phase of the market, and the reason why we got this big sell-off suddenly is because of the minutes of a Fed meeting in December. I want to go through that, and I want to go through why that's important. A lot of the bad things that they were saying and some of the potential upside that I see as well, because this meeting was in December, in mid-December, and things actually have changed in a month. So I want to go through that. In terms of technicals, if you are looking at Bitcoin, I'm really seeing 40,000 as an absolutely monumental area of support for the price. We have a massive area of value there. You can see it was resistance up here 3 times. You can see it was resistance right here once, and then broke through, and then it was support during a sell-off there. So that is a massive next area of resistance, and I just see basically a clear path to 40,000, considering we are really, we might bounce a little bit, a dead cat bounce from a sell-off, but at the moment the market is waiting on really the next economic figures. There's a lot of worry right now, and so everyone is risk off, and the Fed has told them specifically to be risk off. So what I mean by that is that there were minutes, and these are the minutes, you can go and read them, of the Fed, the meeting of the Fed committee, and it was very, very bearish in terms of their outlook, in terms of inflation. And the Fed has 2 remits. The first one is full employment, and the second one is inflation. They call it price stability. Their remit is to make sure that inflation doesn't get out of hand, and they control that through interest rates and money printing, basically. And we know that they've printed a lot of money. I want to give you really a synopsis of this meeting and go through it right now. So you can see this on screen. Firstly, the main points here are all kind of pretty bad for what we call hawkish from the Fed, right? So this essentially means that they are going to be putting the brakes on the economy. So when the economy slows down, obviously asset prices fall, right? Because asset prices are based on the ability of a business to make money and grow. And if that's happening a lot and everything is easy and money's easy and people can borrow money, companies will borrow money, buy back their stock, push up their asset prices, all asset prices go up. And cryptocurrencies basically are trading like tech stocks now, and that's because they are, right? Basically, we call them cryptocurrencies, we call them tokens, but everything except for Bitcoin really is a technology stock, if you want to call it that. Bitcoin is a little bit different, with different properties. We won't get into that now. So firstly, the balance sheet, they said, is bigger than normal. I should actually undo that and have this in red because it is very bad. So comparatively to previous times where they've had to bail out the economy, and this is a leftover of what's happened over the last few years, the balance sheet is way bigger than other times where they've bailed out the economy. And you can see the charts on that, right? So you can just see how big their balance sheet is and how much money they've printed. This is obviously incredibly worrying for them, right? The whole point, their remit is to obviously not have a massive balance sheet printing loads of money. So obviously that's bad, and they're going to want to remedy this. The way they remedy that is by taking their money that they're putting into the market out, and they obviously want to stop putting money in and actually receive money. This means that there's no Federal Reserve bid for assets, right? Because basically what they want to do is take money out of the system and not put it in. That's bad for asset prices. The second kind of rough rough ride that we're getting is that they said, and this is in the minutes, this is what, the committee was saying, this is the highest level of inflation they've had from compared to previous times that they bailed out the economy. This is also very, very bad for the economy in general now, because high inflation means that they have to raise interest rates. When you raise interest rates, the economy stalls, people invest less, and you could even spark a recession, the dreaded R word, right? You could even spark a recession because of very high rates and uncertainty with what's going on right now. So again, this is kind of very hawkish from the Fed, and they're intentionally being so. I'll explain that in a second. The Fed sees more inflation risks. So back when inflation was skyrocketing 6 months ago, let's say call it 4 months ago, and we all saw that, we said, look, inflation's like 10%. It's crazy, right? You heard all this anecdotally and in the CPI figures, which are lower than actual inflation. They were saying it's transitory, don't worry about it. And now later, they're now saying, actually, no, we see more inflation comparatively now than at other times. This again means that the Fed has to come in, be hawkish, raise rates, fears of a recession. Inflation is broadening. So it's not just one sector, but basically the whole economy is out of their control completely. This is a total mess, right? So inflation is broadening. All of this is like, oh, this is awful, and we're going to have to raise rates. We're going to have to suck money out of the economy. And basically, again, fears of a recession. Supply chain issues persist. They do, yes. So obviously with more kind of lockdowns in various countries, including China, which is a supplier of most of the goods, again, this is not good news for inflation, and inflation has to be dealt with. Inflation now, and this is almost a joke. If it wasn't real, it would be funny, but it's, I guess, truth is stranger than fiction. Inflation now is what they call partly reversing. This is almost embarrassing. So when inflation was very, very high months and months ago, and we all said, hey, do you know inflation's really high? They said, no, don't worry about it. It's transitory. And now that inflation is basically high and staying there, instead of saying that, they're now saying it's partly reversing. If you can understand that, then please let me know in the comments. Basically, they signal heavy and hard rate hikes. This is what they're signaling to the market. Hey, everything's out of our control. We are going to come down hard and heavy on you. We're going to raise interest rates hard and fast, and we're going to suck money out of the economy. Okay, the free lunch is over. Take risk off the market. Do not, do not go risk on. Do not borrow money. Do not grow your business. If we can go back, this is what risk off looks like. Bitcoin is a risk-on investment. It's traded like that over the past few months for sure. And we can see that when risk is on, and we can go back, when risk is on, it does very well. When the Fed says it's time to go risk off, then obviously people, all the investors come in and say, okay, risk is off. We're going to stop buying it, right? So that is really what we mean by risk off. Just basically stop buying risk assets, and investors have listened. Here's the silver lining to this. In my opinion, the Fed has done this for one reason. That's because it has a remit to control inflation. And so they have eventually said, look, we have to control this. And they can control it through two ways. One is actual policy, actually raising interest rates. And another one is just coming out and saying, hey, look, we're going to have to do this. We're going to have to raise rates. And we are going to basically force you as the market into changing the asset prices for us. Please kind of, come out of risk assets and, calm this market down for us. Please do that, right? And so please handle this inflation for us before we actually have to step in. So in my opinion, they've really come hard and fast in December and said, look, the first thing we can do is tell everyone, please handle inflation for us, or we'll step in. So here's the other silver lining. I think that all of the virus fears are kind of already over, right? I think the peak that we were seeing, it definitely isn't as bad as before. And so that means everything can calm down and people can get back to normal, and hopefully the supply chain as well. The second one is that the latest PMI figures and jobs reports have been pretty good. PMI is an inflation figure, and it doesn't look to be as high as people had anticipated. So that is very good. If inflation's coming down and not as what do they call it? Partly reversing, as they say. Essentially, that means they don't have to be as hard with the interest rates and taking the money out of the system. People can relax and get back a little bit back to normal, and so risk asset prices won't be coming off as hard. And the jobs look okay. This is good. So as long as the jobs figures are great, this is fairly good for the economy. They don't have to kind of change anything there. So this is what's happened to Bitcoin. If you're saying what is going on with the price, essentially the Fed have just come in and said, look, we have to deal with inflation. We're going risk off, and there are lots of fears. There's lots of FUD around with that. But hopefully that explains what's happening. And I want to get onto kind of what's going to be happening over kind of the next few months. So, essentially, we're in a year where there is the midterm elections in the States, and usually if the economy is doing very poorly, then politicians get removed for the opposition party. And obviously that's not what the federal government wants to happen in the States. So what they're going to do is get all the bad stuff out the way now and say, hey everyone, we're going to come down hard and fast on you. And we've gone through that. But towards the election time, we're going to be a lot softer on the market. And we're going to say, hey, do you know what? We're actually not going to raise rates as hard as we thought we would have to. Things are a little bit better than we thought. And, we don't have to reduce our asset purchases as much. And, we're happy with what's going on. The market will kind of, that's good. And so everyone will feel a little bit better going into the elections. That's just my opinion on things. I'm not going to get into politics, but hopefully this explains some of what's happening right now in the market. The other silver lining for me and why I'm here long term is because of genuine adoption. And it's very different to short-term movements. So if you are a member of my crypto course, go and have a look at that in the description if you want. I talk about, investing over the long term and really taking out market movements out of things, because things happen short term, that's for trading. Longer term is about investing in projects that actually fundamentally grow. And really the growth story for crypto is still intact. And so, I'm happy to be exposed to this market. So just yesterday, I think it was Goldman Sachs, right? So, one of the biggest investment banks in the world is now bullish on Bitcoin after years of saying it's a scam or not even mentioning it at all. Bitcoin will compete with gold as a store of value. It's pretty obvious by now that, the world's largest banks and investment houses are all getting into crypto and see it as an industry that will grow and be here for a long time. So if you can just take out these short-term market movements out of things, the economy is going to affect asset prices. Over the longer term, though, you can be in a growth sector. And I think why I'm in this is because I think that this will be a growth sector continuing for the long term. So one of the things, one of the kind of areas that is very on right now is, OpenSea volume. So this is NFT trading. So one of the things I want to kind of highlight is, crypto isn't just Bitcoin. I think a lot of people were coming into the crypto market through Bitcoin initially. And up until a few years ago, it really was kind of the only A1 asset there. And everything else was, just kind of, very speculative. And that is still the case with a lot of altcoins. But there's just so many more use cases now. If you're into crypto and you enjoy crypto, there are many other things you can do other than just investing in Bitcoin. You can lend out stable coins for a yield. Okay, so you can de-risk your portfolio like that. Even if you just want maybe 10 or 20% of your portfolio in risk assets and the rest in a stable coin like the US dollar earning good yield, you can do that. So there are many more options other than just to say, I'm going to expose myself to loads of risk, and deal with the consequences. So there are things that you can do. One of the things you can do, I'm not saying go and trade NFTs, but it's a use case. And these use cases are exploding. And this for me is why cryptocurrency, the market in general, will grow over time, is because there are more use cases than just buying and selling something for a profit. The majority of human beings don't really care too much about investing, but cryptocurrency can help many people in many different ways. NFTs and games can bring people on board and create revenues for these protocols, which means that they are much more defended against just random speculative ups and downs. So you can see right here, Ethereum active addresses, it's definitely in a period of consolidation right here. And this is because the price is consolidating. Obviously, when the price of Ethereum is going through the roof, you've got more people using it, more people trading it, people selling out to other new people coming in. But when the price comes off a little bit, yes, there won't be as many addresses, people aren't doing as much, and that's totally fine. But the general trend is pretty clear to me. We can also see Bitcoin addresses. Again, Bitcoin really, for the most part, is is just a store of value, or right, we're going to buy this because the price keeps going up. And when you see the price high, you get more action, you get more people having addresses, starting exchange accounts and trading it, swapping it out for something else, swapping it out for some altcoins. Obviously, when the price goes off, that cools off a bit, but the general trend is pretty clear again. What I want to highlight is the value that cryptocurrencies can have besides just a speculative bet on other people buying it. In the future, this is how cryptocurrencies will be valued on their protocol revenue. It's quite clear that Ethereum is by far and away the biggest by protocol revenue. So this is in the last 30 days, they actually earned almost $1 billion. So this is why I think the market is a little bit strange. I get that Ethereum is a risk asset. It's a risk-on asset, but it is also earning $1 billion a month in revenue. So, hey, look, it's a new asset and people don't understand it yet, but there must be some sort of price level for a floor. Like if you're selling off Ethereum, maybe you can say, well, if it makes $1 billion in revenue every single month, maybe you can start valuing this and saying, having a lot more conviction in saying, you know what, I'm going to buy the dip because actually this thing isn't valued that highly. You can see that the price to earnings ratio for Ethereum, if you just treat it like a tech stock, is 38. 38 is extremely low for a massively growing ecosystem like Ethereum. So in the S&P, I think the average price to earnings ratio probably be about 20. It's obviously going to change, but correct me if I'm wrong. But Ethereum with a price to earnings ratio of 38 is not high in my opinion. And I'm happy to value Ethereum as a very solid tech stock, which is basically what it is. That's how I would value it. You can see other protocols right here. Exchanges, games, they are making money. And so things that make money and return that money to shareholders, token holders, they have value. Now, they're obviously not shares and they're going to be regulated. There's just so much FUD and uncertainty. This is what we're in right now. I enjoy it. This is part of the market cycle. Happy to be in the market in the good times and the bad times and just ride through the market in general. And over the long term, obviously, hopefully we all hope that things will go pretty well and grow over the long term. And obviously, if you want to know more about investing, I have my investing course. I would seriously suggest checking it out. It goes through investing, how to set your portfolio up for the long term, the types of thoughts you might want to go through, diversifying and everything like that. I think it really might help you. Also, enter the giveaway, giving away $10,000. That link is in the description as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.